Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Follow me on Instagram at AIH_sports and follow me on my finance channel at AIH Finance. All right. I know people say that they like when I do videos, when I'm talking, they can see my face. But I think this is a video where I believe is important in terms of what's going on in the financial world and how I could tie it to collectibles and also sports cards. And I've showed you this before. And long story short, this is the 10-year tips yield. And the thing is that what does this signify, right? So long story short, sophisticated investors, they historically have not purchased, they have noticed that collectibles do well in a negative interest rate environment. Sure, there may be some outliers where you see particular assets do well. It doesn't matter if it's inflation, deflation, whatever, there will still be assets that will be coveted. But if you're just looking at the overall industry, historically, sports cards tend to do well in a negative interest rate environment. One particular instance was the 1970s, okay, where you had all this inflation and the interest rate was below the inflation rate. And over the past, 20 years, they came up with this 10-year tips yield. And what I wanted to show you, and I've showed this in previous videos, the more positive the tips rate is, the more better opportunities, in my opinion, is to buy collectibles and sports cards. So if you look at over here in 2008, I showed this before, right? What the tips yield was pretty high at 3%. And I talk about this all the time. And Dustin talked about negative interest rates and interest rates in his video today. What's today? Today's Tuesday. I'm probably going to be posting this on Friday, I believe. And this was a great buying opportunity. I see some people that comment below say, I bought in 2008, right? I want to buy when interest rates are really positive, when the market is in a recession, basically. Or if it's not in a recession, where there's virtually no inflation going on. Whoever bought in 2008 and was selling right around here, well, that was a pretty good opportunity, by the way, to sell. Buy fear, sell greed, right? So like I told you, I was buying right around here. I didn't plan it based on looking at interest rates. I just thought, hey, look, cards seem to be cheap and it's a hedge against inflation. That was just my analysis at that point. I didn't even look at the 10-year tips yield. But since I follow gold later on, I was trying to figure out, why did card prices go crazy in 2020? Obviously, they printed money, but there was more to it. And if you just look at, and sports cards were actually going up following 2018. If you could see, the interest rates were going down, down, down. Not interest rates, but like negative interest rates, right? If you just look at interest rates versus inflation, you look in the 10-year yield. And then you're seeing this positive interest rate go negative, right? It's been negative pretty much since the pandemic, right? A little bit positive interest rate in March 2020, but you see the trajectory going down. This was a time where collectibles flourished. So this is Tuesday, right? This graph is updated as of April 18, 2022. So as of the 19th, I saw today, interest rates, the 10-year yield has gone positive. That's right. Positive for the first time since basically March of 2020, the pandemic. when we're going through the pandemic. And today, what's interesting is it looks like no mask allowed, or you don't have to wear a mask on a train or an airplane. So it looks like the pandemic is coming to a close, right? Whatever your views are, it doesn't matter. But we could just see, okay, pandemic's ending. Now, economy is opening back up, and we're on the cusp of becoming positive for the 10-year yield. And if this yield continues to go positive in the coming years, which I do believe it will, now the reason why these 10-year yield has gone positive is because the 10-year yield has gone up, and inflation expectations 10 years from now isn't that high. That's what they base it off of. And you may be like, who cares about 10 years? I am a long-term speculator, investor in collectibles. So this is very important to me. But what I expect by 2024, we're going to see something like this, where interest rates are extremely positive. And that's the time I want to buy. And people don't understand. People say, oh, you're cheap, that's why you don't want to buy. No, I'm just looking at this graph, and I've been seeing for the past, since you could say maybe since, let me look at this, summer of 2021. I mean, I knew this would be going back up when the Fed would start to raise interest rates. And then the market would be like, hey, there's less inflation expectations over time. Now, someone would be like, hey, look at the short-term inflation. That's crazy, right? Yeah, I'm not denying it, but I'm more of a long-term holder and speculator. And that's why I don't want to be aggressive right now. Because everyone's talking about the, short-term flip and all that, it's all good. I still believe the flippers can make money if they buy collections and they sell the product individually. I think there's opportunity there for those that are speculating. But for me, who looks at, fragile versus anti-fragile, I want to be as anti-fragile as possible. And the trend is these rates are going up. I don't want to be aggressively buying collectibles. I just want to touch the best of the best, cheap slabs that no one's looking at, which will have a good long-term gain. Now, the pumpers are not going to be talking about this. Maybe they don't know too much about tips yields and all that stuff. But even if they do know, they're not going to talk about it because they're part of the sports card industry. It's not good for them to speak about this because, in my opinion, there's times to be buying aggressively and there's times to be aggressively selling. Right now, I think we're in limbo, right? Some cards will go up and some cards will go down. And those that exceed the expectations, those cards will go up. So I just wanted to show you this, what I'm looking at, because people don't understand what I look at. They say, oh, well, you don't know what you're talking about. Now, I'm just looking at it, from an unbiased perspective and what the charts are telling me. Next few years, this goes up. Time to buy for me. I'm not telling you what to do. Obviously, I could be wrong, but I was just reading on that website that I showed you earlier on from vintagetextile.com. And what I was saying is that it's really rare to have negative interest rates in society, right? Real interest rates go negative. And this is what the 10-year yield, tends to look at. Now, once again, some collectibles do go up no matter what the situation is, but I'm just looking at the industry in general. And I think this is probably the most important subject out there. I will be getting on my buddy John maybe in the next few months to discuss negative interest rates or positive interest rates. So you could have another perspective of what I look at if you're confused. But I seriously think that you guys should do some homework on this. It's not on Google. You may have to look at some newspaper articles, literature, it's hard to find, but you could definitely find this information. Yes, this is more financial based, but I'm just looking at it, if I were to have a huge chunk of money, would I aggressively be investing? My answer is no, I would not, unless I could get a bulk of cards and I could get them, cheap, pay some 60, 70% on the dollar and then flip them individually. That's the only thing that I do. But once again, I can't tell you what to do. Anyways, guys, let me know what you think about this. Smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.